Joining us is David Malpass. He is the Undersecretary for International Affairs at the Treasury Department. Let's start with China. The president is in Asia. He's heading for Beijing. He has made nice with Xi Jinping. But the U.S.-China trade talks collapsed in acrimony earlier this year. So what is the state of the economic relationship?
Hi, Michael. Good morning. I wouldn't say acrimony. So, this is a hard relationship, and it's changed over the years. So what the U.S. is seeking now is fair and reciprocal trade. So that's the idea that if our markets are open for you, then you should have markets that are more open for us. And that's been a stumbling block. I really think acrimony is too strong a word. So what the president's doing is making sure that we're secure and improving our security in Asia, creating relationships with the Indo-Pacific countries that spans Asia, and then with China really pushing on the idea of fair and reciprocal trade.
Well, you said this morning here today that China's economic liberalization used to be powerful, but we worry that it has stalled or reversed. What has stalled? What has reversed? What are you going to do about it?
So quite a bit has stalled. China used to be in a price liberalization mode. So they would take sectors of their economy and decontrol the prices. That was very constructive for their growth. They used to work on state-owned enterprises and try to reduce the credit subsidies that were being provided. But they're not doing that as much now. Now what they're doing is export credit agencies that are very large. That means they subsidize exports both at home and there at home in China and then abroad, and that creates unfair competition. And so these are all issues where their direction changed. It had been market-oriented or a liberalization trend in capital accounts, in state-owned enterprises, in prices, and so on. In excess capacity, they were at a time making progress, and it's hard to see where that's going now. So that's what we want to push them on.
Well, so with all of that, does the president raise the possibility of sanctions, trade sanctions? Do you threaten to take them to the WTO? What do you do?
This isn't so much a matter of sanctions and threats. It's a matter of the message being with China that what they've been thinking is happening isn't working for us. So really getting to a new paradigm where China really recognizes that there's got to be some reciprocity. I think that's where the message is.
Broadcom moving its corporate headquarters to the United States, so basically it can get around Treasury's Committee on Foreign Investment in the U.S. Is that an issue for you? They want to buy Qualcomm, they want to buy Brocade, and they don't want to be questioned about their ties to China.
I don't want to go to the issue the way you phrased it. I think we welcome a company coming back to the U.S. Remember, it had done an inversion to move its business or its headquarters to outside the U.S. And as the tax bill is changing, what we see is that the U.S. is going to be a very attractive place to do business. I'd put it in that context.
Well, 53% of their revenues come from China, so is that a concern? They might have questions if they were domiciled outside the U.S.
I don't want to go to the CFIUS questions. I want to go more to the business questions of what they're about. The U.S. is a big growing part of the world economy, and importantly, we're improving our tax system, our regulatory system, and so on, and I think you'll see more companies coming back into the U.S.
Treasury Department last week issued an advisory on North Korea's use of the international financial system to evade sanctions. Is that a strict message to Chinese banks that Treasury knows you're violating these sanctions and this is your last warning?
So it's a global message, but for China, they have a large border with North Korea, and so they'll be impacted. And really the message is one that the United Nations put forward in a Security Council resolution, that North Korea is going entirely the wrong direction and has to stop. So that really is the message coming out of U.S. sanctions. These are handled by a different part of Treasury. Sigal Mandalekar is going to be speaking here at this event this morning today and is involved in those.
You and I have talked economics for years, so let me ask you an economics question. Why is the president so relentlessly focused on bilateral trade deficits when any economist will say that that is not a measure of a country's economic health?
The president is very focused on jobs for Americans and wages for Americans. And so a shorthand for that is to look at trading relationships that aren't working for the U.S. And so that applies to the NAFTA relationship, the China relationship, where over time, over a long period of time, these relationships deteriorated. So I think I would best put it as the president being focused on getting a fair deal for American workers within a trading system that needs to be reciprocal, that needs to, where the U.S. maybe for years had allowed its markets to be more open or more inviting than others. That worked, but it also created a lot of problems for us, and that's what we're trying to fix with this. And China being a case in point, and he'll soon be there talking about these issues, that we need fair and reciprocal trade, and it's not happening. It's not what we've got right now.
Dollar is strengthening. That tends to lead to wider trade deficits. Is the Treasury's strong dollar policy then an obstacle to the Trump trade agenda?
So I don't know why you say so. We have a policy of market-based exchange rates. In the recent IMFC communique and also in the APEC communique, both of which I worked on, we noted that if you have dependable currencies, it feeds into more investment and growth. So I think the world's at a good place right now. I mean, if you look at a currency week by week, they go up and down. But if you look at the level of the major currencies now, they're in pretty good shape, and that creates an opportunity for everybody to embrace that and say, this is working. Look, global growth is improving in the U.S., and it's also at the same time improving in Europe and in Japan. So that's a positive move.
Before we let you go now, I have to ask about David Malpass. A lot of talk that the president is considering you for a seat on the Federal Reserve Board. I know you just got this job. Which, as an economist, would you prefer?
You know, I love working for Secretary Mnuchin, and so I'm happy in my spot. So that's not really a question. I've got a big portfolio, one where I think I can make an impact on growth, on policy, and that's really what I'm setting out to do.
But you don't sound like General Sherman.
Remind me, General Sherman.
If nominated, I will not run.
That's not even on the radar screen. Thanks.